All right, good morning and welcome back to the New York session. It is 8 a.m. now. Uh, the ECB rate decision has uh, got lesser effect on the price action that we were expecting in euro, but overall, looking at the chart setups, it's forming a top. All right, so welcome back again to all of you, and let's get started off in this session. Not much to discuss. I'll spend some around 10 to 15 minutes. Let's discuss out euro, dollar index, and gold, long-term charts, daily chart setups, potential reversals in the making are seen right now. So let's get started off with the euro. We are basically concerned about the last wave since 1.1550. So let's understand the probable counts here. There are two counts coming up. It's wave 1, 2, uh, 3, if I label this as 4, and then five waves are done. Or fourth wave expected lower, and then a push higher towards wave 5 higher. All right. Let's look into both the possibilities with the Fibonacci ratios now. I'd want to request you to pay attention on the candlestick pattern which is forming. It's called as a technical or the trader's candlestick pattern. It's known as pin bar. A very practical and tradable pattern. If you look at most of the pin bars, that was a pin bar. You got some opportunity on the south side, then there was a pin bar again. So watch out for today's close. Mostly it's going to be a pin bar again, which could give us at least a leverage towards the wave 4 termination point, if not lower. Alright, let's pull out the Fibonacci ratios. Let's consider that we've just got waves 1, 2 and 3. Okay, let's assume that we've got waves 1, waves 2 and waves 3. It's preparing for an expanded flat in that case. So the Fibonacci retracements, maybe the 38.2%, at least the 38.2%. Expect sorry, drop expected towards the 1.2092 mark at least. All right, in the other case, on the other hand, if so probable case number 1, minimum expectation, $1.2100 levels, potential wave 4, right? Or and capital ABC corrective drop at a larger degree. In that case, in that case, brothers, the bigger wave would come into play. And if we take the retracements, the first, the first target, the first soft target would be around the 1.1650 mark. Basically, it's wanting, it should be taking taking out 1.1550 as wave A, B, and C. That would be the trajectory. We are still sorry. This is the reason I won't take this session more than 10-15 minutes. We'll wrap up quickly. It becomes very difficult when you have such a cold to speak and without coughing. So once again, sorry for the disturbance. Alright, so minimum drop we are expecting is towards the 2100 mark, could be wave 4. Alright, we've got hammered. I mean, I have no qualms in expecting that. Last 48 hours now. But we know that, okay, it's just a matter of time. We'll be covering up most of the points. The aggressive shorts are already being issued now. But if you are a conservative trader, I mean, not everyone would want to take risk after risk on an aggressive side. So if you are a conservative trader, then you should be waiting at least for one more day tomorrow. Watch out for an evening start here and then go short. Right. Interim risk is today's highs for now. The trend line is now passing through the 1.13. So let's see how it is playing out to be. Alright, so next chart, we have the dollar index, absolutely opposite. Don't have much problems to deal with the euros and the dollar indexes. Again, the focus is on fifth wave termination point, whether it's done or whether it is just extended wave 3 or expanded wave 4 into the making. So it could be either 4 and 5, which is completing the fifth wave into brackets, one larger degree, or if it's an expanded flat, sorry, wave 4 right there, and then lower wave 5. Alright. In any case, the minimum expectation of the counter trend rally, if at all it is just for the fourth wave, the minimum, that was wave 2, I suppose. Somewhere around the 91 mark could be the minimum rally if it is going to produce the fourth wave within the fifth wave drop. Otherwise, it's going to go rally all the way towards the 95 mark. In that case, the overall wave structure would come into play, and the 38.2 minimum and the 61.8% resistance levels would come into play here. We're prepared for both the counts. Anyways, even if it is going to go and form a wave 4 and then wave 5, that is just a matter of time before it reverses for a huge counter trend rally. There you are. Once it breaks above the 94 mark, it would be more or less confirmed that the dollar index is rallying towards the 98 or 95 and subsequently the 98 mark. All right, and again, as far as the pattern is concerned, please watch out for a potential bullish pin bar. Euro USD with a bearish pin bar, and the dollar index with a bullish pin bar in the making. Gold, the next chart. First of all, it's producing a bearish pin bar, and a major boundary which, if we are wrong in anticipating that gold, if you were there with me and what wave counts we did last session, with the potential A, B and C could go and test the 1377 or the 1380 mark. That is the 38.2% of the earlier drop which we discussed in the previous session. It's not actually from the 1700 mark, it's actually all the way from the 1900 mark. There you go. So in gold we are absolutely flat. We wanted to go aggressive in the dollar index long. We have refrained from doing so at this point in time with just about aggressive shorts in the euro. And just to remind you, Aussie dollar, we also took shorts yesterday, which are still, I thought we were triggered out, but it's not been triggered out. We are still active. So 3 trades on the desk at the moment: Bitcoin, AUD USD and Euro USD on the trading desk. So what we were discussing was gold could go and test about 1380. A push above that could really trigger a great bullish scenario for the metal. It could go all the way towards the 1418 mark as well. Normally it should terminate at the 38.2% because we are expecting an ABC corrective drop. Now when it's a corrective drop, wave B mostly is a shallow, normally terminates at the 38.2%. Now that's not a rule but could be a guideline. So watch out for resistance around the 1370 or just ahead of 1375. Don't be surprised if it gets reversed from here itself, but be prepared for, I mean, reversals are not yet seen right now. There is no bearish signal, and when we say reversal, minimum drop would be around 1325 from here. That's the first support being taken out, and then on subsequent rallies we might be initiating, or we'll be planning to initiate shorts. That is from around the 1344-45 mark. But right now the story continues to be in control for bulls, but bulls should be tired by now with one previous high being taken out. even if it wants to go and print a new high from here, that's the boundary which is being worked upon. A minimum drop on the 38.2% should be due and should be on cards. There you are. That is 1316, slightly lower than what we were talking right now, 1325. Alright, at least a 38.2% drop, and then maybe a subsequent rally towards the 1400 mark, or uh, at least 1345 could be on the display. Alright, so flat in gold with just about 3 trades on the desk, and let's bring this session to a pause here until the next time, that is UK 2:30 a.m. UK times, UK live 2:30 a.m. Eastern times tomorrow. Please take care and God bless, and thank you for liking, spreading, and helping this channel grow. Good luck to your trades, brothers and sisters, and see you back tomorrow. Sorry for the disturbance on the health front. Goodbye.